Today, I want to compare two stock trading strategies, buy and hold versus frequent trading. These are the two basic choices in your strategy. The first strategy, buy and hold, gives you only one chance in each case. You have to buy at the right time and sell at the right time so that you can get a big gain. Objective is to maximize your gain when you buy and sell later, and this implies a long-term investment. On the other hand, if you do frequent trading, you avail yourself more chances because you are not after maximizing gain. You are only after a small gain. So let me say, suppose you look for 5% gain as an example, and this is a short-term goal. You only want 5% out of your buys. So in that case, all you need to do is that you catch as many 5% as possible, and you know that the more you catch, the more they add up. And one simple calculation is that if you can catch 25% increases in a year, and that totals up to be about 100%, this can easily beat the buy and hold strategy. Now, the frequent trading strategy looks like it's a gambling mentality. A lot of people say, well, this is no good. However, when you think about your work or your business, the things you do every day, do you agree that you work every day and every week to build the future? So if you do that for your job, why can't you do that for the stocks? So it goes back to what I've been saying all the time. You play short term in order to build the long term. Now we come to the topic of when to buy and sell. Well, we know that this is always a big question for any player. Whether you play long term or short term, you still have to think about when to buy and when to sell. Now the key is to identify an uptrend. Do you know how to identify an uptrend? If you're not very sure, I would like to advise you to go to my other videos, especially videos 46 all the way through 58. When you compare the two strategies, you find that for buy and hold, it's harder to make a decision because you limit yourself to just one chance to buy and one chance to hold. And you're also after a big gain. But if you are doing the other strategy, which is frequent trading, you are only after a small gain, which is easier. Why? Because the fact is that in the stock market, the stocks go up and down more than the 5% margin usually. And they go up and down more than this margin many times over days or weeks. So all you need to do is that you take advantage of this fact. And the easy thing to follow is that you buy on temporary dips and you sell for only 5% profit. And then when the stock dips again, you buy again. So you just repeat this for as many times as you want. Now, when I say temporary dips, it means that you have to be able to identify that the stock is on an uptrend, because if it is on an uptrend, it only has temporary dips. When we talk about frequent trading, we also have to think about time availability. Do you have enough time? And many people say they cannot find the time. If that is so, I suggest that they better stay out, because if you cannot find the time, you better not do it. And I also ask you to remember, no pain, no gain. I want to let you know that you don't have to babysit your stocks every minute, because all you need is that you follow the price of the stock a few times a day for a few weeks. And after that, you will get a good feel about the price movements of the stock. And after that, you can put in limit buys and limit sells. Now, limit orders are very simple to do. All you need is to put down how much you want to buy at what price and how much you want to sell at what price. And then those orders will execute automatically. Now, after you put in those limit orders, you may find that you may have to go in there and adjust the price levels or the quantities when necessary. You don't have to do it many times, maybe 1 or 2 times in a day. The next thing that we have to look at is cash availability. Everybody knows that no money, no talk is the overriding factor. If you have no cash, there's no need to talk about buying stocks. Let me tell you all those things that cash can do. If you have enough cash, it enables you to have more choices and flexibilities with your stock purchases. You can buy quality stocks that cost more money but is more safe. You can also gain more money because you can take more chances. You can afford to do that. And how do you take chances? Very easy. You just buy different stocks at different prices. And if you play the short-term frequent trade, you buy them at different prices, chances are 1 or 2 will give you a 5% gain. And if you have more cash, you can spread your risks by diversification. Diversification means you buy different stocks at different prices. And if you have enough cash, you can recover from your mistakes easier, because many times you may have bought a stock that is a little bit too high. Then all you do is that you don't sell it, you hold it longer until the stock turns around. And before the stock turns around, if you have more cash, you can continue to play it. You play the same stock at a lower price. When you play the same stock at lower prices, you can add up all your gains to make up for the losses